welcome to ET Now Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Nantara Rai. I'll be with you for the next 30 minutes, and trust me, we've got a power-packed show lined up for you. And I'm going to begin with a big global story, Apple. The last time Apple was in trouble, it turned to Steve Jobs for help. Steve Jobs had to return to Apple. He revived Apple with a slew of new products which revolutionized the tech world forever. iPod, iPad, iPhone. The biggest success was, of course, the iPhone. And it's that very product, the iPhone, which is now jinxing Apple. For the first time in 20 years, Apple has had to issue a warning to all of its investors and cut the revenue guidance from about $93 billion to about $81 billion. In a letter to investors, which is incidentally on the Apple website, CEO Tim Cook has blamed a whole host of issues, including China's slowdown, the strengthening of the US dollar, and changing consumer behavior. Let's go across to Rahul Dhyama for more on this. Rahul, I think the writing is on the wall. Mere upgrades ain't going to solve Apple's problems.
While the reasons that Apple has spoken about, and you did highlight, it's about China largely, the trade tensions have impacted with a major slowdown as far as iPhone sales. But the nitty-gritties, if you were to look at the investor note, also talks about the fact that there is definitely a change as far as how consumers are adopting the iPhone. Are they upgrading or not? Because he says the upgrades are not as strong for iPhone as they have been in emerging markets. But trends even in US indicate that people who usually upgraded their phone every 2 years are holding on to their iPhones for as long as 3 years. The fact that you can replace the batteries at a cheaper rate, that is also impacting the trend. And the fact that the prices have also become competitive with several other players in the space to sort of get most of the technology, the features in other phones. So definitely a lot of this has to also be attributed to the big shift and the focus that Apple has heavily inclined towards the iPhone sales. But let's talk about China, because that's something that has hit them hard. They have cut down their revenue forecast by over 5%. They say up to 100% of the year-on-year worldwide decline in revenues is coming from Greater China, which includes China, Taiwan, and Hong Kong, which is definitely one of the most crucial markets for them. And the trade tensions have also had a ripple effect on this, with both sides not really agreeing to solve some of these major issues. Seems like this will continue. In fact, I've just received an update that Goldman Sachs is out with its note on this development, and they say that we see the iPhone sales further dwindling down in 2019 because the implications of the US-China trade war will continue. So analysts also really penciling in the fact that this decline will continue for at least 2-3 more quarters. While India did not find a mention this time, remember just 2-3 months back in the earnings call, while Tim Cook talked about how flat the sales in India are, but he did indicate that he's quite bullish in negotiations with the government on to open stores. So India is also quite a tough market. So much of competition that we have seen from the likes of OnePlus, Vivo, the churn that we are seeing there. So back here in India also, I personally know a lot of iPhone lovers who are ditching the iPhone to other competitors. I'm not sure, Nantara, if you are an iPhone fan yourself.
I am an iPhone fan. In fact, I have an iPhone 6s, and I still haven't felt the need to upgrade it. My daddy wants to buy me one. That's his choice, but I think that's part of the problem that Apple is facing, mere upgrades. And look at the prices, $1,000, and it's struggling with the sales, as we can see. Not struggling, but it's not selling as many iPhones as it thought it would. So let's take that conversation forward. We've got two guests joining us. Navkender Singh, the Associate Director of Devices and Ecosystems. We're also going to be joined, I think, on Skype by Ashutosh Sharma, the Vice President and Research Director at Forrester. Now, Kinder, let me come to you first. So there is a letter to the investors in which Apple has flagged off everything from a slowdown in emerging markets to the strengthening of the dollar to Greater China just not buying as many iPhones as Apple thought it would during the holiday season. But there's a larger problem, and maybe the hint of that we get is in CEO Tim Cook's letter to all of the employees, where he's called for a town hall, where he does admit there is a change in the consumer trends, that there is a need to revolutionize, there is a need to get together and not get bogged down by this, and mere upgrades is not going to work. There's no Steve Jobs that Tim Cook can turn to, but do you think the writing is on the wall that Apple needs to come up with a whole new product line?
Oh, absolutely, Nayantara, and thank you for bringing me on the show. I think it's important to read between the lines, what Tim Cook has said. He's pointing towards the fact that these incremental innovations or so-called improvements on the hardware in terms of 3D touch and Face ID and other stuff, it's not exciting consumers as much. Coupled with the fact that when you have your starting lineup starts at for the new launches starts at $800, which is iPhone 10R, then suddenly you're indicating to the consumers that the phones which you bought 3 years back, like yourself, that's good enough for me right now. I don't need to upgrade. And there are other options in the market. If I'm in the market with about $700, $800, or even $600, there are other options in the market, in premium Android space like OnePlus and even Samsung, which is able to give me more innovations in terms of cameras, more design language, the notch screen, the water drop notch, the note kind of, stuff. And, that's able to excite the consumers more. And I think that's what Tim Cook is pointing towards, and I think that's important that Apple, takes this very seriously. Otherwise, we should expect more shipment volume, at least, declining in the next few years as well.
Okay, let me now go across to Ashutosh Sharma. So, Ashutosh, I won't talk to you so much right now about how what the prices of the iPhones are at the moment and the challenges it's facing from, let's say, a OnePlus, or even Google for that matter, is planning to come out with a cheaper phone and a more affordable phone. But Tim Cook, in the letter to investors at least, is blaming China, is blaming the dollar, is blaming the trade relations of US with a whole host of countries. Do you buy this argument? Is this good enough? Or do you think maybe the time has come where Tim Cook needs to realize that the Apple premium, the Apple tax, as it's popularly called, is just waning off?
Yeah, I think, thanks, Nayantara. First of all, thanks for having me on the show. You're right. Apple has kind of sought to blame everyone but themselves about this decline in revenue, as well as the numbers overall, the shipment across the globe. And I think, as the previous person just mentioned, Apple again needs to reinvent themselves as a company. They're trying to do that as by launching services, but at the moment their efforts on anything other than iPhone are very minuscule in comparison to what this behemoth brings to the table for them. So yes, they have to make efforts. They are in a desperate need of bringing a new product, something that people can aspire to, look forward to, to own. They did that with iPhone, and to be honest, iPad was just initially came across as a bigger iPhone, but again, it has helped them really well. But beyond that, they missed the boat on the home devices like Alexa and Google Home. They really do not have any comparable product there, and in general, they have kind of failed to be the consumer-centric company that they used to be, where they were the ones determining what consumers might need, understanding what ecosystem that they operate in, and how exactly can they place themselves at the center of that ecosystem. And that's something Steve Jobs did really well. Not to say that the current the team at Apple is not capable of doing it, but this certainly have not seen or have not shown that in recent years as to how to become that company which basically understands the nerve, the pulse of the customer, and kind of comes up with something really path breaking. They've essentially been followers, if you will, in last few years of the technology trends than being the leader themselves. Even if you look at their effort in AI, Siri does not kind of compare very well with Alexa and Google's efforts, and even Microsoft's for that matter. So I would say that yes, Apple desperately need to look internally, look at where do they figure in the overall space of the customer that they serve, versus kind of blaming the economy, blaming China, the trade tension, and all the other factors that they have been talking about.
Okay, let me go back to Navkender now. Navkender, you were talking about the other options, and what's interesting is, Foxconn, which, for example, produces so many of the iPhones, also manufactures many other smartphones that are cheaper. Let's talk about the OnePlus, for example. You got Google, which has already come out and said that it's going to be coming out with a cheaper and a more affordable version of the smartphone. So do you think the time is cut for iPhone to become cheaper? And is that something Apple can afford? Because the entire branding, the entire point of having an iPhone is also that it's supposed to be premium.
Yeah, so that's an interesting point. It's come up so many times in the past 6 months or so. I don't, as IDC, we don't believe that, Apple wants to dilute the brand and go to the mid-tier kind of segment. Till about 2016 and H1 or 2017, they were playing the volume game even in a market like India, where about more than 60% of their sales used to come from, models which were, N-2 or N-3, their, previous or, before that, those generations. They paused, they relook at the whole strategy. They figured out that, that the whole thing of that market will discover its own price is not working for them. It's diluting the brand. There was an iPhone available at $300. There is no other market in the world where there'll be an iPhone available at $300 without the contract. So, I don't think, Apple will launch a mid-tier kind of phone. Yes, if they start producing in India, they can drop the prices of the phones, which they produce in India because they'll have the duty concessions. But I don't think they want to go that way. They want to play the value game. They still hold about 80% plus smartphone profits of the world, of the industry. I don't think they will do that way. But, having said that, people expect innovations, real innovations from Apple in terms of the products. And this, a so-called unnecessary hike of the,
Okay, I take your point. Ashutosh, let me come to you now. Let's not talk about whether there should be a hype or not be a hype, but Navkender over there believing that we're not going to see Apple trying to dilute its brand and come out with a cheaper version, but maybe it could try and offset the sales that are not taking place by opening more manufacturing facilities, let's say in a burgeoning market like India, which is also a hyper-competitive market. You've already got the disruptor, RelGeo, trying to take the lead with that. It has come out with the Geo phone, which is doing well. You only have to pay a security of 1,500 rupees. Is that the way then to go?
Right. So Apple has actually they need to do two things. One, they need to have a short-term plan, and part of the revenue that they're missing out in China can be replaced with a market like India, but it will only be a small part. Think of it. Right now, China makes up for almost 20% of Apple's revenue globally, and India is a minuscule 2 to 3%. Well, one way to look at it that there's a runway in India for them to grow, and yes, it will help if they have local manufacturing that will bring down their prices by easily 10 to 20% or even more. So that will certainly give them a fillip in terms of the pent-up demand that India has for Apple products, and I'm sure there will be a lot of buyers that they'll get in the short term, but that'll be a short-term solution, and then they hopefully would make up for some of the degrowth that they are seeing, or rather lack of growth that they are seeing in markets like Greater China. However, and that's not a long-term solution. The long-term solution for them would be to kind of look at some of the innovation that they need to bring, and they have to basically look at coming up with a much more of a killing proposition, if you will, in terms of a new product or innovation, which they certainly have been lacking. If you look at the markets, India and China are very similar in terms of the customer segments that we see. So we see, for example, the way we classify consumers, we see what we call as progressive pioneers, which are the early adopters, if you will. Then we have savvy seekers who are looking at basically guys, after the pioneers have adopted something, they want to kind of appear hip, and they want to kind of go for that product. And
Yeah.
then there are three more different categories of consumers who ultimately come to in the game fairly late. Now, China, India, very similar. So to some extent, focusing on these markets will help, but it will certainly not going to replace their long-term problem of having some being an innovative company.
What's very interesting, Navkinder, is that this is something that Steve Jobs had thought about. He had talked about the market getting saturated with iPhones, with iPods, with iPads. But having said that, for example, we used to have Apple TVs back in the day. That is also seeming to lose its relevance. But do you think Apple has started making strides in the right direction? For example, look what it's trying to do with health, with the medical industry, for example. So having said that, would you also not concede that, yes, Apple had started moving in the right direction? It's the saturation of the iPhone market has happened earlier.
Oh, absolutely. Yeah, you're right. From another device point of view, wearables is one of the areas where Apple has done really well, and with their new variant which was launched a few months back, I think they have really zeroed down to the fact that the use case for the wearables for a consumer is along the health and the elderly and the whole fitness piece. Having said that, iPhone still contributes significant portion of the revenues, and I think the quality of the phones which are being produced and which have been produced in the past few years, they are themselves to be blamed in the sense that phone works for 3 to 4 years. Now you're expecting consumers, where consumers are moving from contractual obligations of the telcos to the open market, and then the bill shock drops for them by about $25 to $50. Now they say that phone is still working. Why do I need to upgrade? But to your point, they have started making strides in the right space, at least in the smart watches space. But I think larger issues, which, from a consumer technology point of view, connectivity is smart homes, where frankly the Siri and the assistants has not done really well, and Google and Alexa are far ahead in that. I think more needs to be done there if they want to catch the next set of revolution of the consumer technology in the next 5 to 10 years. As the 5G is on the anvil, you'll have multiple hundreds of devices in your home which will be connected to your to your network. And how does Apple want to play there? I think that's the thing which I'm sure they're thinking, but I think they need to speeden up the whole process.
Okay, with that, gentlemen, I'd like to thank both of you for taking the time out and joining us. The Apple stock had crashed 7% post that revenue guidance cut. In fact, the stock had to be stopped from trading as well. Later today, CEO Tim Cook is holding a town hall with all Apple employees. We'll be right on top of this story. It is certainly a developing story. The writing is on the wall. It needs a more disruptive product pipeline, or even services for that matter. Or I don't see Apple right now, at least, or that's what the experts say, cutting prices drastically. Thanks a lot, gentlemen, once again for joining us here on Startup Central. I'm going to move on to the other story that we'll be tracking on the show. It's a drama that's unfolding in the food delivery business. We're not talking about who's become a unicorn today, but in fact, the problems it might face in the judiciary and in the legal world. Small restaurants have filed a petition against online food delivery apps, the likes of Zomato, Swiggy, Uber Eats, Food Panda, at the Competition Commission of India. The small restaurants have accused these food tech companies of misusing their dominant position in the market, and accused all of these online companies of giving deep discounts, in-house kitchens, and internal sourcing. So I'm going to take this conversation forward with Rahul Singh, the president of the National Restaurant Association of India. Hi, Rahul. Good evening. Thanks for joining us here on Startup Central. This is Nantara Rai. I'm going to be very candid. I use Zomato, I use Food Panda, I use Uber Eats, I use Swiggy, I use all of that. I don't get any discounts from what is being referred to over here. What I might get is a maximum 100 rupee off. Is that really so bad? And isn't there a case for maybe the small restaurants coming onto these platforms and improving their own bottom line and top line?
Hi. So it's not about what the value of the discount is. It's about how do you portray and attract customers. If you're going to say, I'm going to do a loot for biryani, I'll do a biryani for 69 rupees, with delivery being free. Have you ever heard of a 69 rupees biryani being delivered free? That's not possible mathematically. So there is a deep discount which is being offered to attract customers. What they're trying to say is these are customers they're attracting, they're creating a new ecosystem, which is all fine. That is what a disruptive or an aggregator should do. But if it's going to come at the cost of a brick and mortar business, yes, the restaurant owners and the people who are in the brick and mortar sector would get affected. That's one side. That's the discount side. The other side is then you go and create phantom kitchens, or what they call black kitchens or cloud kitchens, and create their own brands, which they always show as the priority. So when a consumer is, so it's like, dominant player being there who owns the ecosystem of the online data, and you're just seeing the data which is relevant to whatever they want to show. So it's not based on if you make a better product. It's about if it's my own phantom kitchen or my own private label, that's what you will show in your search engine. So these are all predatory pricing, predatory mechanism, which is what's being accused for. So all the rest is working together and actually being affected. And that's why the NRI has to step in and create a dialogue between the aggregators and figure this out. How do we resolve this? Because this is just the beginning.
But Rahul, a lot of the arguments that you're making is what we saw maybe being made by the brick and mortar retailers, by also the trader associations when Flipkart was in its earlier years, or Amazon had come to India as well. It's very similar, but in those cases, you were also seeing brands, for example, paying a premium for good display on the shelves. We haven't seen the kind of intervention that you would want at the CCI. Why do you think your case is any different?
First of all, it's not my case. This is a change.org created by a group whom I don't even know. This became viral within the NRA member chapter groups, and that's why it came to our fore. And the first thing that we had to do is address it. And one journalist picked it up because this became pretty viral. I was called upon. I had to go. But before even all this happened, last month itself created a meaningful dialogue roundtable, and which is happening actually next week, and that's happening in our office. So we've got all the 4 big aggregators coming to the office for the first time in the same room at the same time. And the whole idea here is to figure this out. We are here not to accuse. We have to put together all the issues which the restaurant companies face. There are multiple. Deep discounting could be, differential commissions could be, or arm twisting maybe that, if you're not going to give me this kind of a commission, you will not come in the search engine. Masking of customer data, for example, because earlier anybody who wants a loyal customer knows what is, when you call in a pizza delivery, they know whom's calling. Or when you call through these aggregators, your numbers are masked. There are multiple issues that can go on and on. But the idea here is to talk to the aggregators and figure what their side of the story is. Only once we figure this out, we'll take the next steps. We've not gone to CCI. We're not going to PMO on this. And anyway, this is a DIPP case in any case. Even the press note 3, which happened for the retailers, is a DIPP case. I think DIPP has to take a stance on this, because this is FDI money being invested in burning cash to kind of create a new customer base, or basically attract the customers or create a dominance here.
Rahul, that's very interesting that for the first time you're going to see the aggregators actually come together under the same roof and meet all of the interested parties and all of the stakeholders. I take your point that you personally are not a petitioner, but since you are representing the National Restaurant Association of India, ahead of that meeting, what according to you would be the best way to create a fair and an even playing field?
So 2 things. First and foremost, food, after air and water, food is the third most ingredient without which you can't live. That's a given fact. Food is very important when it comes to safety. So the food safety and standards are extremely important, and there's no zero tolerance on that. No commerce can beat tolerances on food safety and standards. Now, what happens with food safety and standards? There's an FSSAI regulation which is already in force. In fact, last month they took out a new directive, or what you call a revised directive and guidelines for the e-commerce guys. So for example, a rider, he's also a food business operator. He's riding with the product. Another 50 minutes, if he's riding with the food product, the food would be not fit for consumption. So there are guidelines which the e-commerce guys had to be given. FSI has already done that. So that's the FSI part, which is the apex body when it comes to food regulation. There's no compromise. Also, they came and if culled out all the restaurants which are not even FSI compliant. That 3 months back that happened when 50 to 60,000 restaurants went offline on these aggregators, because aggregator says we don't care whether this person is an FSI compliant or not, but an FSI had to step in and says no. As per the law, you need to care. You need to make sure that the FSI number is registered and it's actually on the microsite of that particular. Whenever you search, you can now actually see the FSI number. As a consumer, you should see. Without that, you shouldn't be ordering from that particular restaurant. So that's all what the FSI is doing. But when it comes to what we call predatory pricing, or let's say unethical practices, I think the only organization or only department which can actually take care of this is the Niti Aayog, DIPP. They need to figure this out. Whether is this really affecting the brick and mortar business? That's what happened with retail. the retail press note which came in lately, which has shaken up the Flipkarts and Amazons, has happened because of DIPP. They are the ones who've taken out the guidelines. And that is what we're doing. So if you have to reach the DIPP for that level, we first need to sit with them, figure what their side of the view is, tell us, we will tell them what our restaurant members have their house on, and then we'll figure it out and create something. Maybe there is something we can create it together. Like I said, without a meaningful dialogue, there's no use trying to say you or me here.
Okay, I take your point, Rahul, and here on live television is an open invitation to join us on ET Now. After that important meeting of the aggregators and all the stakeholders, including the small restaurants. With that, it's a wrap on this edition of Startup Central. Many thanks for watching.